What if the way you have been taught to earn money is the most expensive way possible? Not expensive in terms of fees or costs, expensive in terms of time. Because right now most people are running a system where money only arrives when they show up. When you work, the money comes. When you stop, the money stops. And nobody ever sits down and explains that this arrangement, trading your hours directly for income, has a hard ceiling on it that no amount of effort or promotion or hustle can ever break through. There are only 24 hours in a day. And every single one of them that you spend working is one you are not spending on anything else. Cash flow minimalism is built on a completely different arrangement. It is the practice of building assets that generate income whether you are working or not. Not because you found a shortcut and not because you discovered a secret, but because you understood one thing clearly, that ownership generates income in a way that labor never permanently can. In this video, we are going to look at exactly what cash flow minimalism is and how dividend investing works as its most reliable engine and what the honest building process looks like and how to set up a system that eventually requires nothing from you on a daily basis. Everything in this video is honest and grounded and designed for someone starting from the beginning. No complex strategies and no unrealistic promises. Just a clear look at a system that has been building quiet wealth for ordinary people for a very long time. Before we look at what cash flow minimalism is, we need to be honest about what most people mean when they use the phrase passive income. Because most of what gets called passive income is not passive at all. A rental property requires finding tenants and managing repairs and handling disputes and reviewing the market and making decisions regularly. A content business, a YouTube channel or a blog or a podcast, requires consistent creation and audience management and platform monitoring. A digital product business requires customer support and marketing and occasional updates. None of those things are bad. Some of them are excellent income strategies. But they are not passive in the honest sense of the word. They are active businesses with lower time requirements than a traditional job. The distinction matters because cash flow minimalism is specifically about income that requires genuinely minimal ongoing management. Not a side hustle that takes fewer hours than a job. A system that runs on its own schedule entirely independent of your daily attention. The closest thing that exists to genuinely passive recurring income for an ordinary person is dividend income from a broadly diversified portfolio of income-generating funds. You invest money into funds that own hundreds or thousands of companies. Those companies generate profits. A portion of those profits is distributed to shareholders as dividends. You are a shareholder. The money arrives in your account on a schedule set by the fund. You did not manage anything and you did not create anything and you did not show up for anything. You own something, and ownership paid you. Let us now look at how dividend investing works in simple and honest terms because the concept is straightforward once the jargon is removed. A dividend is a payment that a company makes to the people who own its shares. When a company generates profit, it has a choice about what to do with that profit. It can reinvest it back into growing the business, or it can distribute a portion of it directly to shareholders as a dividend payment. Many of the largest and most established companies in the world have paid dividends consistently for decades. Companies like those in the consumer goods sector and the utilities sector and the financial sector that generate reliable, predictable revenue year after year. Now, instead of buying individual company shares, which requires research and judgment and carries higher risk, the minimalist approach is to buy a dividend-focused index fund. A dividend index fund pools together a large collection of dividend-paying companies into a single investment. When you buy a share in that fund, you effectively own a small piece of every company inside it. And when those companies pay dividends, your fund collects them and passes them on to you. The two most common types of dividend fund worth understanding are accumulation funds and income funds. An accumulation fund automatically reinvests your dividends back into the fund to grow your holding. This is the better choice during the building phase when your goal is to grow the size of your investment as quickly as possible. An income fund pays your dividends out to you directly as cash, monthly or quarterly depending on the fund. This is what you switch to when you are ready to actually receive the income. The cash flow minimalism strategy is built on this exact transition. Build the asset base using accumulation and then switch to income distribution when the asset base is large enough to generate the monthly income you need. Now let us talk about the number at the center of the whole strategy, because without a specific honest target, the plan has no direction. Your cash flow minimalism number is the monthly income figure at which your dividend portfolio covers your genuine essential needs without you working for it. Not your lifestyle number and not a comfortable number. The minimum honest number, what your life actually costs when it is stripped of everything non-essential. Let us walk through how to calculate it. Step 1 is to write down your monthly essential expenses. Housing and food and utilities and transport and basic insurance and any debt repayments. Nothing else at this stage. Add those up and that is your floor number, the income level at which your survival is genuinely covered. For most people in the UK in 2026, this number sits somewhere between £1,200 and £2,200 a month, depending on location and housing costs. Step 2 is to work out how large a portfolio you need to generate that monthly income from dividends. Most broadly diversified dividend index funds currently yield somewhere between 3 and 5% per year. Using 4% as a reasonable middle estimate, if you need £1,800 a month, that is £21,600 per year. Divide that by 0.04 and you need a portfolio of approximately £540,000 to generate that income at 4% yield. That is a large number. And the honest thing to say about it is this: it takes time to build. This is not a strategy that works in 6 months. It is a strategy that works in years and decades for someone who starts correctly and contributes consistently. But the calculation itself is what gives the strategy its power. Because once you know your number, you know exactly what you are building toward. And every contribution you make moves you measurably closer to a specific point where the income arrives without your daily presence. Let us now look at what the actual operating structure of a cash flow minimalism system looks like, because the setup is simpler than most people expect. The first element is an investment account that shelters your returns from tax. In the UK, this is a stocks and shares ISA, which allows you to invest up to £20,000 per year and receive all dividends and growth completely tax-free. In the US, the equivalent is a Roth IRA with similar tax-free treatment on qualified dividends. Setting up one of these accounts takes less than 30 minutes through any of the major low-cost investment platforms. The second element is selecting 1 or 2 broadly diversified dividend-focused index funds to invest in. You do not need more than 2. The goal is broad diversification at the lowest possible cost, not complexity. Look for funds with a low annual management charge, ideally below 0.5%, and a track record of consistent dividend payments over at least 10 years. The third element is automation. You set up a direct debit from your bank account to your investment account on the same day each month immediately after your income arrives. The amount goes in automatically and the platform invests it into your chosen fund automatically. You do not decide each month whether to invest. The decision is made once and the system executes it every single month without your involvement. This automatic and consistent contribution is the engine of the whole strategy. It removes emotion from the process, and it removes the monthly decision that most people eventually skip when life gets busy. The fourth element is a quarterly review, not a daily one and not a weekly one. For times a year you spend 20 minutes checking that the automatic system is still running correctly and that your fund choices still align with your goals. That is the entire ongoing management requirement. 20 minutes 4 times a year. Everything else runs without you. So here is the full honest picture of what cash flow minimalism actually is. It is not a shortcut and it is not a trick. It is a deliberate shift from a system where your income depends on your daily presence to a system where your income depends on your ownership. The shift takes time to build. The building phase requires consistent monthly contributions and patience and the discipline to leave the system alone while it compounds. But the destination, a portfolio large enough to generate recurring monthly income that covers your genuine needs without your daily effort, is one of the most concrete and achievable forms of financial freedom available to an ordinary person. The most important thing to understand about this strategy is that every month you contribute and every dividend that is reinvested and every year the compounding continues is a month and a dividend and a year that cannot be taken back. The system does not care whether you are paying attention to it. It grows when you ignore it, pays you when you are sleeping. It does not require your motivation or your discipline or your daily decision-making once it is correctly set up and running. And that quality, a financial system that works regardless of whether you are watching it, is exactly what the minimalist approach to money is designed to build. This week, open one tax-efficient investment account if you do not already have one. Choose one broadly diversified dividend index fund. Set up one automatic monthly contribution no matter how small, and then leave it alone. The system will do the rest. Share this with someone who keeps saying they want to stop working so hard for money but has never been shown a clear and honest picture of how to start. I will see you in the next one.